talk about here today is an opportunity that has generated a tremendous amount of excitement. My wife Teresa and I have been in the business of training real estate professionals for 20 plus years now, and we have never ever been so excited about an opportunity to help all of you go out and make a difference in the market, bring more buyers in the market. How many are excited about the idea of bringing more buyers in the market? Does that sound good? Absolutely. And in the process, we can go ahead and improve our communities. We can help create jobs, lots of good things that can come of this. How many of you are aware of folks right now who are sitting back at the office waiting for the market to get better? They're waiting. The government's going to solve this problem, right? Things are going to happen. The good news is we've got the folks here that know that we have to go out and make it happen, right? We've got to go out and make things happen, make a change, make a difference ourselves by putting it together and taking advantage of opportunities. So even though we have a different market now, we've got some good fundamentals, right? There's always something in the market I think we can find as a positive. We can find some new opportunities. I've been often talking about the fact that we had a perfect storm of conditions that created some real bad things for the economy. Terrible things for the economy, bad things for the real estate industry. We all, and those of us here who are still standing found a way to make it through that. We found a way to stay positive in light of that. What's great is what comes out the other side when we have a perfect storm of bad conditions, when things kind of go wrong and go through change. What comes out the other side? New opportunities, right? So I think we have a perfect storm of opportunity, and that's what we're here to talk about. How many of you are familiar with the FHA 203K loan program? Here we have something that has been available through the FHA, which is under HUD, right? In the 70s, the 203K program was made available, and here it's been kind of sitting there. It's like a diamond in the rough. It's kind of sitting in the corner. And here we've been looking, all of us looking for an answer. My wife and I, with our background in the construction end of things, recognizing that all kinds of homes out there need repair and so on, kept looking for an answer. Here was the answer. What is it? What is the significance of the 203K? Somebody says, what is the 203K? What's the big deal? What would you say? So what we have is in one loan, the funds for the purchase and the renovation. So one loan to buy it and fix it up. How many of you think that's pretty cool? That's very cool, right? Because we have lots of homes out there that would benefit from that. Think about, have any of you had the experience where you've gone to a friend, a family member, or you're just talking to someone about the 203K and explain what it is? Have you had that experience, and what is their reaction when they first hear of it? That's cool. I can't believe it. I had no idea I could do that. And it's amazing. Try that. When you have an opportunity, just talk to people and explain real quickly. Once, I'll give you some detail here, talk about that. You will find that people who had absolutely no intention of buying a home will say, you know what, I could do that. Because people know there are great buys out there, don't they? All right, so let's go through this real quickly. So funds for the purchase and renovation, one loan. It's not two separate things. We have as low as a 3.5% down payment. Just like all the benefits we have on other FHA loans, as low as a 3.5% down payment, those funds can be gifted, and FHA loans are assumable loans. Are you aware of that? Assumable loans. What it means is someone buys a home today with an FHA 203K, like a 203B loan, buys a home today at today's interest rates. If they go to sell that a few years down the line and interest rates are now higher, a qualified buyer can come in and buy that home and assume that loan at that low interest rate. So that's a benefit, right? It's a great benefit. All right, FHA 203K, again, like other FHA loans, easier qualification, less than perfect credit, higher ratios as far as your income relative to the expenses. By the way, does anybody know, in the year 2005, what percentage of loans were FHA insured loans? Yeah, there it is, the number. Yeah, just a little less than 3%. Yeah, very good. We've seen that grow now to record levels. On a national basis, we hit, in 2009, over 30% of all mortgage loans being FHA loans. Isn't that incredible? Now, why was it so low in the year 2005? Anybody could get a loan, right? If you could fog a mirror, you didn't have to have a job. You want to buy a house? Go ahead. We'll give you a first, second, third. If you want to go ahead and make improvements, or if you need that to make the payments, whatever, not a problem. Well, we know the world's changed. We've seen now FHA loans. Now, how many of you in your market area feel that the availability of FHA loans is a very important key to keeping your market moving? Pretty important, isn't it? What happens is the FHA insures the loans, where does the money come from to fund all these FHA loans? It comes from the banks. It comes from private fund sources. So isn't that kind of cool? What we have is the government is insuring the loan, which means if the lender follows certain guidelines, they make that loan. If somewhere down the line that loan were to go bad, if that borrower would default, the federal government will now come in and make them whole, make that lender whole. So if the government is insuring, providing that insurance, what does that encourage a lender to do? It encourages a lender to make loans they might not have otherwise, right? FHA loan limits, you're all familiar with this. We have different FHA loan limits for different areas of the country. It's relative to the average cost of housing in that area. The FHA loan limits were raised about 2 years ago, and so we now have a range of the low end of the scale here, $271,000 up to almost $730,000. How many of you have in your markets quite a few homes that will qualify that are under those loan limits, right? Yeah, a lot of homes, so that's tremendous. So the idea is the total loan, it's one loan. Let's say the purchase price for the home is $100,000. Let's say the renovation's $30,000. So we have to make sure that the $130,000 then, certainly that's below the loan limits, that's not an issue. The next issue is what does the buyer qualify, but again, that total has to be below that. Owner occupants, so the 203K is available to owner occupants and nonprofits. So this means what? Who cannot use the 203K? Investors, exactly. The 203K can be used for 1 to 4 units. Are you aware of that? So again, another investor opportunity, but this is for the average person who wants to go ahead, buy a home. So if we have owner occupants buying a 1 to 4 unit building, that means what? They got to live in one of them, exactly, one of those units. Have any of you done any deals on this with the 203K with a multi-unit like this? All right, great opportunity. Think about the idea of maybe putting on seminars where it could be an investment seminar, how to use the 203K to do this. Our son Christian is a broker. He has a broker's license in California. He's our first official 203K specialist. He was one of the first one going through the whole program. So a lead comes in one day in Long Beach. He's got some guy interested in doing a 203K up there. Because we have a consumer face on our website, people come in, they learn about it, and all of our 203K specialists get the leads coming through. So Christian calls this guy and calls back. He says, "This is a horrible lead. This is just terrible." I says, "Why? What's wrong?" He says, "The guy's got bad credit, he's got no money, and he's got some idea that he's going to buy a duplex. He wants to become a landlord someday. He wants to buy a duplex and start out with that." And I said, "This guy sounds perfect for the 203K. Stick with it." Well, that was 4 weeks ago, and they're in escrow now on a $360,000 duplex in Long Beach, a historical, really neat old building the guy's going to fix up. And he was able to get him qualified, even though his credit wasn't fantastic. The guy went and borrowed money from family and friends because he was able to, pull his 3.5% back together that way. I mean, isn't that great? So this guy's dream was able to come true. We've got a building, a duplex that was in disrepair that's now getting fixed up, which is good for the neighborhood. Isn't that awesome? Christian's happy. He's making a commission on this thing and putting the deal together. But here's what I like. I like the fact that this guy, who may not have had any other opportunity otherwise, was able to take advantage of a great deal in the market today. And I'll bet you 10 years from now, maybe sooner, that guy will own small apartment buildings and he'll be a landlord and will have his own little real estate empire going because he was able to get his start doing that. Does that make sense to you? Does that excite you as much as it does me, the idea of helping people make that stuff happen?